Get to the financial sector. Our next guest calling on regulators to create a more sound banking system by encouraging consolidation among smaller banks, which would help keep lending. Joining us now is Meredith Whitney, founder and CEO of Meredith Whitney Advisory Group. Welcome back. Good to see you.
Thank you. So good to see you guys.
So you went really deep on this report, and it caught our attention because people aren't really talking about bank consolidation. Why did you decide to look into it?
Well, for 15 years now since the crisis, credit crisis, people have been talking about the banks getting smaller. And the top 4 banks have gotten smaller. They've stopped lending. Their market share in consumer lending has collapsed. So they originally ring-fenced the top 14 banks to get smaller. And they increased capital reserves. They increased regulatory scrutiny, incredibly expensive, and really discouraged lending. So now they've ring-fenced. Now it's gone from 14 to now 34 by adding 20 new banks to the list. And what this means then is that the 20 new banks, or at least the nine traditional banks, will surely decrease their lending. And what does that mean to their overall system? So the 14 banks control roughly 60% of the FDIC deposit and lending market. The now 34 banks control 75% of the U.S. FDIC deposits and assets. And that means then 75% of the market is going to contract or continue.
People are going to lose access to credit.
People will have access. It'll be more expensive, and it'll move outside of the banking system. And so what that means then, and here's a real opportunity for regulators. And I feel like I had the David Bowie song, "We Could Be Heroes," in the back of my head. You have 75% of the market control market share with 34 institutions. That means 25% of the market is controlled by 4,200 institutions. And so as the banks get smaller, the small banks have to get larger. And what I did in this report is talk about what's different today, right? So there's no existential credit threat because credit has moved out of the system. And for the smaller banks, and I picked the best small banks to be the consolidators within this industry. And they also, interestingly, they're very well executed. They've all done M&A before, so they all have the skill set to do M&A and integration successfully. They all have high loan to deposit ratios, which is the opposite of the top banks now, and will be the progression of the new 20 banks going forward. And they're positioned exactly where the U.S. growth is. So every 60 years in the United States, for the last 250 years, you've had regional growth. So you think about the Industrial Revolution being the Northeast, banking centers developed within the Northeast. You think of the Power Revolution, banking centers developed along the Mid-Atlantic and further out to the coal regions in the West. Then you look at the manufacturing revolution, and you've got banking hubs in the Detroit area, throughout the Midwest. And then you have what I call the leverage revolution, which brought everybody to the coast. That was the housing revolution and the leverage revolution. That was our last economic revolution. What is clear today, the new economic revolution is clean energy, reshoring, manufacturing, and demographic migration. And that's happening in the South. So you look at the GDP growth numbers of the South, they dwarf the coasts and they are dwarfing the North. And so this is where banking hubs should be. So the 6 banks, the 6 banks that I chose, or 5 banks that I chose, all have strength and all have diversified earning streams, diversified lending bases, and diversified state concentration. So these are the natural. So regulators will look like heroes because if they allow these banks to consolidate and get bigger, get economies of scale, keep pricing down, keep lending inside of the FDIC regulated banking market, which is safer for everybody, you're naturally progressing to where the next regional hub of banks should be.
So they'll be buyers.
They'll be buyers.
And they are. These 6 are.
They've been buyers.